That is, in my opinion, a historical perspective that ignores the fact that we are in the fourth industrial revolution and that just one business in the world possesses those chips. In the end, I could make the case for a stock that has the potential to trade at 30 times earnings. When you start looking at our years, $180 to $200 is not exorbitant if they start earning $5.50 or $6 eventually. You're referring to the average company trading 30 times revenues and 100 times earnings, which is relevant to someone like me who covered the dot-com bubble in the 1990s. It's like, oh, look at Cisco99.com. If someone compares something like your Christmas dinner, your uncle, or anything else, examine Nvidia. Yes, but here's the thing. Was there a $2 trillion capital expenditure? In reality, who is spending it? Tech businesses make $300 billion annually and have $1.2 trillion in cash on hand. Unlike the 1990s, this is not a startup-funded wait. As someone who experienced it, correct? Yes, and it's incredibly intriguing to me since, even if we consider Optimus, it will require GPUs. And when we consider 1 million bots, it appears that there is an unquenchable and unstoppable demand for their product. It is not if we are ever going to develop GPT-7. That's the point, though. People don't comprehend Jensen, his personality, and the culture, much like they don't understand Palantir. People don't comprehend the company's culture, you see. Oh, look where we are today. Options is not what they say as they sit there. I could get a crazy automobile, you know. They have opinions such as, we must keep innovating. And that's how they vary from, say, Intel, a quasi-government organization. Correct. It's the same thing that occurred to Intel. If you look at Intel, it practically turned into a regulating body for the Beltway. It's clear that Nvidia has experienced many ups and downs in relation to its stock movement. I assume that a lot of that is noise to you, because the stock can be further away if you think that GPUs have a monopoly and are inevitable. It's noise, which I detest because every time you mention noise, someone says, noise. At $140, you adored it. It's $130 now. Yes, I agree, but the point is that it's like a sports fan shouting, go, during the second quarter of a game. This is a long game, it seems. In my opinion, it's a long game. I only become negative when a name undergoes a structural alteration. The thesis must then be examined. However, when you consider Nvidia, where demand and supply are still 15 to 1 and just 4% of businesses have chosen the I route, and where the numbers end up, I'm not saying you don't have irrational concerns about tariffs, stock declines, and downgrades. Ultimately, though, I believe that we are playing a long game over here. I could give you instances like the Nasdaq 5000 to illustrate what it really comes down to, man. Yes, and you're reminding folks to keep this in mind. I'm sure I made a lot of poor decisions. People are saying things like, oh, what about this call? However, the Nasdaq 5000, boom, 2010, 2011. TARP, what about it? This Fed 2012. Oh, you're up about the crisis, Greece and debt. It's finished. Look at the Fed deficit, you know. It's not sustainable, dude. This is the offer. I understand. However, it just happens, much like when we discuss Black Swan incidents in Tokyo, where I was present during Tokyo Black Monday. I was present. It's this. Exchange of currencies, completed. Has there been any structural change, you know? Is it true or false? $67 trillion is the amount of money on the island. There are still a lot of institutional investors in poor positions. Although there will be volatility, the question is if we are still cutting when I consider yesterday and Powell, and you move from 3 or 4 cuts to 2. Indeed. Are we going on a hike? No. Will we be reducing by 100 basis points or 125 basis points over the next 12 to 24 months? Indeed. A gentle landing? Indeed. A revolution then? Yes. Is Trump's arrival deregulatory? Yes. I'm not someone who sits there thinking, oh, tomorrow night, the Fed, for that reason. The government is about to shut down, buddy. I'm here to check the betting odds on C-SPAN. It's like, dude, that's the stuff. They are similar to the demons that undermine the idea. Yes, did Goolsbee allay concerns about a rate increase in the upcoming year? because that was kind of getting into the discussion. In a research paper released Wednesday, Torsten Slok of Apollo made reference to that. But does it, in your opinion, take that off the table for a short while given the numbers from today and Goolsby's remarks? Yes, precisely. Therefore, the handles were possibly down 50 or so when I checked early this morning. Following that, the PCE number dropped by roughly 24. As the day wore on, I'm not sure what the rest of it was. Those interviews, perhaps? Given how bullish those were, that might very well be it. However, I believe that some advancements about the debt ceiling also played a role. In addition to yesterday's magnitude, the sell-off was becoming a little messy. I feel somewhat better as a result. Although it's encouraging to see the PCE figure slightly improve, I continue to believe that inflation and few cuts are the direction of the trend. Correct? Yes, I consider how the market's response to the PCE aligns with the numbers. From 950 AM until the market's peaked, you essentially rallied by about 260 basis points. After that, we simply sold out till the end of the day. However, that resulted in a significant reversal of our perception of the future. Before the markets opened in the morning, you glanced at your screens and thought, wow, this is kind of sloppy, and we're probably going into the weekend. Now, people are reconsidering how they perceive the Fed. However, I believe you're correct, Karen. Sloppy in terms of yesterday's trading, or more accurately, the trading over the past 2 days since those Powell remarks. That, in my opinion, is the most significant factor. Markets are jittery, in my opinion. The S&P is down 3% over the last 5 days. Even with today's fall, it's been a difficult time following an exceptionally strong period for stocks, when inflation was seen to be on your side. Going into the Fed meeting, there were several other prints that gave the impression that the Fed would not be raising, even if inflation is still a possibility and disinflation is definitely over. That being said, that is currently the greatest danger for 2025. It is not that the Fed will raise rates, rather, it is that the Fed's image will shift. Indeed, I concur with that. The fact that they won't be hiking, in my opinion, is crucial. Therefore, it doesn't really matter if they cut by 2 or 4 times. Do they hike? That's the problem. Powell stated that rates are significantly restrictive on the day of the meeting. Correct? He thus concurs with Goolsby. He concurs with Williams. Additionally, he does not want unemployment to continue to rise. You have the Powell put then? That's how I perceived it. The markets, in my opinion, completely overreacted to the commentary. He was far more hawkish than the market desired, and I get that. The storyline hasn't altered, in my opinion. He's there in case the economy deteriorates. He's going to chop harder. He has an abundance of resources, time, and base points to truly chop. The market typically overreacts, but I believe they got it wrong. I mean, the sort of dilemma that still exists is the necessity to square the circle. If you require any other changes, please let me know. This article also discusses a significant change in the perspectives of some individual investors. From meme stocks and the momentum trade, we've moved on to firms with solid fundamentals and a longer time horizon. We're not simply trying to get in on the trend. We're trying to be long-term investors. You enter various fund manager questionnaires for this reason. Where is the busiest trading at the moment? MAG. Long MAG. That essentially just provides you a better idea of how the retail investor has changed in the short term and how that is somewhat reflecting the changes we have observed from many institutions throughout 2024. Special thanks to individual investors. I adore you all. I adore you. Okay, let's begin with Nvidia itself first. On the surface, you would think that, well, it's Nvidia, 8.25% seems pretty fair. But the implied move for tonight's earnings is around 8.5%. The average change over the last 5 quarters, as we and I look back, was 7%. 8% then? Reasonable. But if you go a little deeper into those figures, you'll see that in February, when the stock was 67, you had a 16% spike in 2 of those quarters. The stock is available today.